In accounting, cost of revenue is the total cost of producing and distributing a product or service. It is especially important because it is the non-scalable cost of a scalable business, meaning it is very difficult to cut down this part from the total cost. To put it into context, for every dollar that Spotify makes, cost of revenue is as high as 75 cents, while that number is only 10 cents for Autodesk. Why is there such a big difference? Because not all technology companies are created equal. Now, let's put technology companies into these 4 categories and look at the earnings report to find the answer. By the way, all financial statements are public and you can download them for free either in the company's investor relations website or EDGAR database in sec.gov. For media service companies, let's look at Spotify. The cost of revenue for the year of 2019 is 75% of the total revenue. Netflix, 62%. Both are big numbers. Now, let's look at rideshare. Lyft, 60%. Uber, 51%. Again, fairly large numbers. Coming to advertising. Alphabet, the parent company of Google, 44% of revenue is cost of revenue. Facebook, only 18%. I think we're seeing a trend here. Software companies, Adobe, 15%. Autodesk, 10%. Almost too easy. Let's break down cost of revenue and see why it is non-scalable. For every product or service sold, there is a cost of direct material and labor, payment processing fee, shipping, sales commission, and so on. Each of these costs takes a small chunk of any revenue you make. On the other hand, rent, marketing and advertising, research and development, and other fixed or indirect costs are scalable. For example, the rent of a factory does not change whether 1 unit or 1 million units are sold. Spotify and Netflix pay a hefty fee either to royalty or original production for every Uber and Lyft ride. Insurance, payment processing fee, driver incentives are representing half of the revenue. Advertising business costs less. They need to make sure bring traffic to their site, as well as paying content to keep users engaged. Programmers make software, albeit their expensive salaries, which is part of research and development, are not included in the cost of revenue. Data center and software licensing are not expensive. Here are 3 takeaways in this 3 minutes video. First, cost of revenue is non-scalable. Second, some technology companies have way higher cost of revenue than others. Third, you can find financial statements of every public companies online for free. Thank you guys for watching this video. I hope you enjoyed it. Please like and subscribe my channel. This is a series of 3 minutes earnings report. I'll see you in the next episode.